Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. All right, we got a non-farms payroll. And to be honest with you, normally I come into here and I have an idea about what I think it should be. But in this particular situation, I kind of think that there's enough uncertainty about it that I'm really not sure what we're going to get. I also did not get as much data here. Let's check real quick. Consensus 175K. The last reading being 256. And if they were to miss that, that would be really bad. So I kind of have this bias right now to think that the labor market is really hard, but I think that is really more on the job openings side. So I don't necessarily expect there to be a significant downtick. Plus, you know, whatever kind of downtick I saw in hiring in December is probably seasonal. So 175 is not necessarily, you know, too hot or too cold. Wow. $143. That is for sure a buy, but this is ooh. Well, that didn't work. Where's the earnings? Earnings was hot. Spot 5 versus spot 3. Oh, that's interesting. Unemployment rate ticked down too. Well, I tried taking like the bounce just reflexively without completely understanding the numbers. I'm feel like it was a bad trade and I should just bail on it, huh? It sounds like the revisions were down. Rate futures traders see the Fed cutting in May versus June before the jobs report. Be careful with the earnings number, which looks like it was boosted by fewer hours, maybe because of the California fires. Ah. Well, this often happens in the payrolls, though, where, like there's an initial reaction, like the very, very initial reaction seems to make sense. And then like how it behaves throughout the rest of the day doesn't necessarily make sense. Now, in this case, for it to like retrace it and get cut down so quickly, that is a little unusual. All right, fine. You know what? I shouldn't have had 5 contracts on with that. I should have only been doing 1. Oh well. Now the benchmark revision to 2024, negative 589K versus negative 675K expected. So the benchmark revision was less than they thought. Man, that was super crazy in the S&P 500. It was super crazy in the bonds. Jeez, that was good 16. Morning, Ape Hall. Okay, well, if they are reacting to the hourly earnings being spot 5 instead of spot 3, then I think that is going to eventually work itself back up to higher. But it could be other things. Could be the revisions and the unemployment rate and all of that. It's like I think me taking a spot here is kind of gambling, because I don't think I really understand why it's doing this. Where are we, by the way? You didn't really take a look at our charts, did we? All right, so they retraced the upside from 2 days ago in the treasuries. S&P 500 is kind of mostly flat. Oil continuing its downtrend. Gold and silver looking pretty good. Copper, wow, copper really breaking out. Japanese yen, we've had some significant movement over there this past week. And Bitcoin was still unable to recover 100,000. Oh, okay. My news squawk is just telling me that Kashkari is going to be on CNBC to talk about the jobs data. U.S. non-farm payrolls 143,000 versus 175K expected. That's a pretty weak number. Like, that's like the weakest number relative to the expectations that we've had in months, isn't it? No, we had one other 2 reports ago. I want to say. Let's go to Forex Factory and look. Yeah, well, there was the November one where we got practically 0. And then there was the August one where we were under. This one's not as bad as the August one. Okay. Interesting that didn't get filled. Chad, good morning. Yeah, I think I'm doing this on the experimental account. I think I need to move to the trades in the serious account, slightly larger size, but these ones experimental. Because I really think this one is a gamble. I really, non-farms is always really weird. I do believe in this long though. On the initial one, I think that it's just kind of bad luck on picking the spot. The change in cumulative delta looks like that they're where they were. So no, I didn't take this position, Mike. I am I am on sim only until I get a new day job. Which kind of sucks because my trading in the sim has been really, really good. But although this one, I don't know, this is where I'm kind of screwing up because I'm trading much larger this week than I was before. So it kind of messes the stats up, right? You don't actually believe, well, I don't believe enough in, I would say that I really do think that we should be going up, but I know I have enough experience to know that on a non-farms payroll day that I can't really make a call like that very accurately. I guess I'm a full-time trader. I mean, even then, I'm not really a full-time trader. I just trade for 3 hours, right? Sorry, I have to be careful about what I say around things like that because I really don't want to give anybody watching that is new the impression that, some expectation of profits from trying to copy what I'm doing. I really do not believe that most people should trade futures. I think that it's really retail futures trading. It should really be for a select group of people that are They have the money to burn and are just really obsessed with the markets because there's a very high risk of loss in futures. And that's particularly true on non-farms. So like I want to be involved, you know, like that's the thing. I want to be involved here. So I'm taking one, like I have an opinion. I want it to be voiced. My opinion is that was a weak jobs market that should bring interest rates forward, or interest rate cuts forward. There was the hourly earnings, but that might be a kind of aberration because of the California fires and everything. Now, one could also say that the number is weak because of the California fires, and that probably is true. That probably is true. So I think like what I'm seeing in the labor market does not, you know, because the jobs that I'm looking at aren't necessarily in California, right? But I think that what I'm seeing in the jobs market is does not explain that big of a drop. So, and another thing is that it also very much seems to me that the drop that I am seeing in the labor market, there's a very, very good chance that it is short term. I actually yesterday, so like there was this thing at the beginning of the year and in December, there was just like hiring was just terrible. It was just absolutely terrible. And I was starting to feel pretty discouraged. But now all of a sudden after this week, I've got like 5 things coming up. So I have more than ever now. I actually had 3 recruiters contact me yesterday at setting up schedules for times. I have one. I tell you what, man, it's so weird. Like some people are so totally on it. You know, they just give you the link and you enter your availability in the calendar and it's set and that's it. Then I have these other people that they're like, oh, you know, email me back, or they try calling you and they leave a message, but then when you call them back, they never pick up and all of this sort of, it's just like, what the heck? Okay, well, what I'm seeing at the moment is there does appear to be a little bit of a low resting liquidity effect here. So that VWAP at 12 seems to be like the high end of that low liquidity range. And when they start getting up into the edge of it where there's more offer liquidity, they're shying away from it. There was actually a relatively major sell right there at 11.5. And I am seeing the deltas, particularly in the 5-year, start to shift down. So, like, a part of me is like, yep, these are the sorts of things that happen on non-farm. That's why, you know, really don't like trading them. And if I was going to trade it, it would be like super, super small size, right? But now I'm watching it and I'm kind of like, well, maybe if I had a little bit more prep in there, like, you know, better stops set up and that sort of a thing. Well, I tell you what, if the 10-year goes down there and makes a new low, then I am surely like defeated. It's totally possible given the market making metrics that I'm seeing right now too. Okay, so I'm seeing something really interesting though that I should highlight here. Is that in the 10-year, they didn't quite get to the cost basis, right? They didn't do it in the 10-year, but they did bounce off of it in the 5-year. So it's a little bit unusual for the 5-year to be the one that like really, really matches and everything. But I'm wondering if, you know, like the 5-year is going to be more sensitive to short-term changes. So I'm kind of wondering if I should be paying more attention to it, those levels in the 5-year on a non-farms payroll day like this. But you see right here that in the 5-year, they're clearly selling it. They're clearly selling it and not necessarily seeing a change. Okay, so now we're getting Kashkari's comments, so we could get some serious volatility from that. You don't like they create the insight bars afterwards? Well, it creates that kind of like liquidity vacuum. But, you know, this one is different. I mean, this is different from, I'm not going to say overall. I used to be, I remember that every time a news event like this happened, it was like there'd be a big move like this, and then it'd go all the way back, and then maybe it would do this, right? That sort of a pattern used to be super, super common. That's like when I first started watching the markets, like 2010. Not first started watching the markets, but between 2008 and 2010. Those were the sorts of moves that I would see on news. And now that is not really very common. It's usually more like this, or sometimes it does this. But for it to like go below is, I would say, unusual. If it does it, it's more likely to be on a non-farms payroll day for sure. But nah, I think this move is unusual. So Kashkari is saying that the most important data point is the 4% unemployment rate. So, you know, I was saying, why would they cut it down if the headline number missed so much? What are the other numbers in there that might explain why we're going the other way? And I pointed out that hourly earnings number, but kind of that one is probably just an aberration of the fires. But then there was also the headline unemployment ticked down. Not the headline, the unemployment rate ticked down. And Kashkari is pointing that out as a significant factor. I'm not sure I see that justifying such a strong sell. But that's what we're getting at the moment. Excuse everything, and makes the chart harder to read. No. Like, so like, I think there's two parts to this, right? One is, yes, the chart is doing funky things because of that. But like, there's really not a whole lot of value to be had in the chart to begin with, right? But when you come and you watch it on the DOM, they actually tends to be pretty clear. Like this area, it started showing the signs that it was going to do this here right from when it touched it. This is just, you could see that there was a decent amount of volume trading there, but the market makers were not actually holding out a lot of liquidity at any one time. They did more of that like here and here than they did trying to hold liquidity here. And when they hold liquidity here, what that does is it uses up all of their inventory down here, and so then they don't put as much up. So this is actually, from watching the DOM, it gets super, super clear, right? But the issue in a non-farms payroll overall is that the future market orders just are very, very unpredictable for me. I cannot predict what that net. I'm quite shocked to see us down 20. Is it? Yeah, it's about 20,000 contracts net sell from the news. I'm very, very surprised to see that. Did you trade off of it? No, you don't want to trade off. Man, Tilt, you're not paying attention, man. No offense, dude. Listen, I'm an ADHD kind of guy. Like, if I have a thought, it's really hard for me to keep it in. So, like, it's nothing personal. I'm not like sitting here like I'm trying to undermine this guy. Maybe I might get mad and I might start playing with people. But I really don't feel like you're paying attention. Because we talk about this almost every day. That is not an entry signal for something. What does it mean? It means we're probably going to chill here for a while. Like, come and look at the 10-year chart. Okay? So I think most traders would look at this and be like, what the fuck? You just had a non-farms payroll. It's been, it's been 25 minutes. It's been longer than I thought. It's been 25 minutes. How do you go from that much volatility to literally 2-tick range for 10 minutes? What the F? I think most retail traders would be absolutely, that don't trade the 10-year, would be absolutely perplexed. How is that possible? Right? I'll tell you how it's possible. Liquidity hole. The latent liquidity in this spot is really low. The latent liquidity here and here is relatively high. And so it just gets stuck in that range. Are they going to bust it? Let's see here. That is by 1 tick. Although I must say that what it's doing so far on the DOM is pretty lackluster, given that it was a break like that. There you go. Well, I think that screws over that one, so. I think I should just be like sit on my hands now, right? Oh my god. Like you Uzi, am I being stupid here? Like, I literally handed it to him on a platter and he didn't get it. I just got 5 more ticks in the 10-year before it matches last NFP's release range. Really? My recollection, though, was that last NFP's was pretty uneventful. I think, though, that what we're getting right now, well, okay, so when I look at the DOM, I do see some relatively large sells. So there was like that higher liquidity here, and they were able to find the orders to push through it. But I do not see a significant net change in cumulative delta. So I don't know. That seems weird to me. I can't sort out why that is. I don't know if it matters. You're not here every day for the entire stream. Yeah, but I just explained it. I'm going to try again. Okay. I'm going to try again. If I trade 100,000 contracts in the 10-year treasury. Okay, if I do it all at once, it's going to move it super, super, super far, right? Okay, you're not going to do that. You're going to split it up and you're going to execute it over a very long period of time. And so there's this question. How far is that going to move it? Well, let's just say that I did it yesterday and it resulted in the treasuries moving half a handle. Okay. I think that it would move more than that, but I'm just giving you even numbers. Okay. That's what I did yesterday. I traded 100,000 and it moved the instrument half a handle. Okay. Today, I'm going to trade, or maybe this was last month. Let's just say it was long enough ago that like the market doesn't remember. Okay. Today, we're going to trade 200K. How far is it going to move? What do you think? You think zero? I'm wondering if anybody there is actually pulling it out and doing the math or not. You don't know, you don't trade the on. Okay. You don't have, do you have a guess? Do you have a guess? So 16 is half a handle. Okay. So it basically it traded 32 ticks. That's basically 32 ticks. Okay. Let's not do it like that. Let's do it in ticks. It went 32 ticks. Okay. So that you're not like thinking about like, can I convert between the treasury, pricing scheme and all of that sort of thing. Okay. It moved 32 ticks. How far do you think it will move if we trade double? Okay, 64 if all else is equal. Oops, I didn't mean to do that. Hold on. Where's my pen? Hold on. Okay. We traded 100K. It moved 32 ticks. It's natural to think if we trade 200K that it will go 64 ticks. All other things being equal. Double the volume should result in double the move, correct? That's not what happens. It's a good guess. That's not what happens. It actually goes, if it's two times the volume, it goes 1.414, blah, 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 blah. So it'll actually be 43 ticks. And go 43 ticks. Which is 32 times the square root of 2. Okay. It follows the square root law. We can express that like mathematically like this. The f of q. Okay. Oh, it's not f of q. It's the I. So the impact of an order of size q is equal to y times omega times the square root of Q over V. Y being a scalar specific to that instrument, so Y should not really change a whole lot day to day, but you'll have to like do an execution to calculate what Y is first, and it tends to be between 0 and like 3. Usually 0 and 2, but you know, with cryptocurrencies and everything, we have to put 3 now. Okay. Omega is the volatility of the instrument. Q is the size of the order, and V is the volume. Okay. So if you graph that, this is I and this is Q. At first, it seems like it's linear, but then you find very quickly that it follows the square root law. Okay. Why? Why does it follow a square root law? So there's a study, and they did this thing where they kind of said, okay, let's do a Walrasian auction. What's a Walrasian auction? A Walrasian auction is every 5 minutes, we're going to have an auction. Okay. And everybody can go in and submit their orders. So there's going to be people that are going to submit offers. There's going to be people that submit bids, right? These people right here are going to get filled, right? The rest of these guys are not. And so the next auction, all other things being equal, is going to look like this, right? All of those offers carry over, all of those bids carry over, but the stuff in between doesn't carry over. There's less right there, okay? Now, of course, more orders will come in. As time goes by, this one, maybe it will fill in a little bit until eventually, you know, it's normal, okay? There's less latent liquidity here. So you run into this situation where I can't, if I move up, I run into more offer liquidity. I move down, I run into more bid liquidity. I go in the middle, there's not much liquidity at all, and it just trades across it. And so you get this zone where it's very easy for them to move across it. Price is very, very extra sensitive to orders in this location. And so it kind of creates this kind of pull against things. So if I'm buying, the more that I'm buying and the more that I'm buying, this is kind of a drag on me. And that's why it ends up being a square root. My God, Till, you have got to be one of the Aren't you just saying yesterday, if a big player can change everything instantly, your square root is a cute hypothetical? I won't even argue it, but the market conditions are never the same. Yeah. So you know how we know this? Do you think that I just made this up? No, we're not assuming that this 200K gets dropped all at once. So you know, you're going to execute it over time. So let me tell you how well, there's multiple studies that show this, but I think that the best one that you could go and look at, or my favorite, is a million meta order analysis in Bitcoin. So what they did was they convinced Mt. Gox to give them all of their data for like a year. Information about all of the transactions, including like account numbers. Okay. And then they went in and they said, okay, when somebody's buying a really large amount of Bitcoin, between the time when they started and when they ended, how much did it move? And then they say, okay, how much does it move relative to the amount of orders that is in that, right? And it follows a square root law. Like I said, the formula, I'm not just making I would think, man, when I put a formula up like that you would say, oh, he's actually getting this from somewhere. If you're going to drop it all at once, it's a little bit of a different thing, but you're never going to see an order that size dropped all at once anyways, right? It would be dumb. So the thing that's interesting about the square root law is that there's like a limit to it. Like there is a range of validity. And once the meta order Q comes over a certain amount, it actually goes like this, and your impact increases exponentially. That's like when the market goes completely unhinged. This is basically like nobody's holding liquidity anywhere. Okay. The thing that's significant about the Bitcoin study is that it's like a new instrument. It follows, you see the same mathematical behavior that you do in every other market. So that was really, really solid evidence that it was structural in nature, that the square root law was structural in nature. Basically, this is caused by the use of a limit order book. It's an emergent property created by the rules of how a limit order book works. Right? There's interesting stuff about this. We could talk about how it, changes the volatility, that sort of thing. But let's not get caught up on that. We were talking about the Walrasian auction, right? You do these are the orders that are submitted, and then next time around there's going to be a hole there where the stuff was filled because there's not enough time for them to get filled. And then next time around, maybe there's a little bit less from here, but there's a little bit more in here, and eventually it gets to where it's a straight distribution like that. Okay. In a Walrasian auction, you do it every 5 minutes, right? And what we can do is we can kind of do our calculus stuff. Okay, now it's a 1 minute auction. Now it's a 1 second auction. Now it's a one, and you just decrease that slice until it's an infinitely small slice using integration. And what happens when you do that? You get the square root comes in. Q over V. So the square root law is caused essentially by market makers pulling liquidity in front of a move. It paradoxically makes it harder to move because what happens is like your natural thinking about if orders pull, how it affects volatility, it increases volatility, right? Well, it does, but it's like increased volatility here and decreased volatility here, right? So it ends up being a drag on the overall price, right? Okay, so this process right here, how long does this take? So what they found is it follows the square root law. When you stop executing, that is, you're done with your order, or maybe you're doing it in waves and you're just done with that wave, right? The market tends to go into a short-term mean reversion period. It looks like this. Okay. And the impact of this is a 3/5 law. So it's like, y omega, but instead of square root, it's q over v to the 3/5. Okay. It's been a little while, so I can't remember all the formulas and everything, but basically if you go and do all the calculations and everything, you basically get that this will come back the 3/5, but the time here ends up being x, and this ends up being 2.5x. Okay. So what you should get is quick move up, pull back. So for that, there's kind of a curve to it, but a lot of the time on the charts, you don't see it that way, right? So this is going to be in time. This is going to be x, and this is going to be 2.5x. Okay. So what it means is when you start to see that behavior happen, it's not going to move as much, and it's going to take 2.5 times the duration of the initial meta order for the market to recover. Okay. Now it turns out that in our market, that tends to be 45 minutes. Okay. So if you just had a big move like that, it might make sense to wait 45 minutes before you do something. Otherwise, what happens? You come in here, you go, oh yeah, I think this is going to continue or whatever the deal is, and then like it doesn't. I hate how it's. Let's fix that. You do this. It's like you go short here, and it's like it's super slow. It looks like that they're eventually going to go lower. This is maybe not the best example to look at because we also had Kashkari speaking, right? But would you rather take, if you were going to go short, would you rather take it here or here? Right? Like here, you immediately got rewarded for it, whereas here you had to wait like 2 times as long before it started going lower, right? So when you're watching the DOM, you can see this behavior, especially in the 10-year, very, very clearly, because what you'll start to see is tons of volume starting to trade here, and then the bid and the offers are just like start going super small. It's like they hardly ever put up more than 500 contracts, and if they do trade up and down, they might trade up and down on even less than that. That's kind of the sign of the low latent liquidity. That's not an entry signal. It's kind of a signal that's like, okay, if I'm already in a position and I don't want to wait around for 45 minutes, then might as well take my profits there. It's a good place to take profits. If I really, really want to take a trade, I can probably wait for 45 minutes. Can probably get in it later, and it makes sense to get in it later because maybe you'll have more information in 45 minutes. Maybe there's something else going on in the market and everything else that kind of gives you a clue about what you want to do 45 minutes from now. Do you see? It is actionable. I just explained to you how it's actionable. It's actionable in that you were maybe thinking about taking a trade and it's going to be you don't take a trade there now. Or I was thinking about holding it, I'm going to take profits there. Is that not an action? It's not an entry signal. That's different from it being actionable, right? So the sort of thing that's like, I see some sort of pattern on the DOM here, like it does this and it does that, and this is a pattern that I want to enter in long there now, and I'm going to have some sort of risk reward and blah, blah, blah. Like, it doesn't really work that way. There are trades like that exist, but they are so short term that they're not really worth you dealing with or worrying yourself about too much, unless you're going to do a HFT. There are some of them that we talk about, like catching the edge, because that's a really key thing to understanding, like what the market does, you know, how limit order book works and everything. But the entire idea of a technical entry signal, like, remember we were drawing this graph the other day that's like, this is the time frame, and this is like the amount of edge available on a technical basis, technical edge, like that, right? There's like a ton right here for high frequency trading, but then there's this kind of gulf where it's like there's too much noise, right? And then this is momentum, Momo, HFT. The gulf of retail trading shittiness is right here, right? So how do you deal with the gulf of retail trading shittiness? What you do is you don't use technical signals as your entry. Instead, you have some sort of a larger theory about what the flows are going to be over the next 30 minutes to 3 hours or whatever your time frame is. And then once you've determined what you want, where you're going to take a trade, there are two things that I would look at to help time your trade. One is that did I say two things? Because as soon as I said two, I thought of more. One thing is I always have a bias to doing it earlier. So I might just straight up get in, right? Another thing is, what are the liquidity conditions? Because if we are getting that liquidity whole thing, then that kind of means I can wait. I have some time. I really like to try and get in when the market seems dull, when it doesn't look like there's anything happening. There's not something on the chart that people find interesting, right? It's just kind of like random noise and nobody's quite sure what to do with that. And like the activity is relatively low. Because you think about it, like if orders move the market and like, of course it's super, super volatile like that, right? But I would rather get in here because that means that there's more likely to be orders in the near future to move the market for me. So I want to get in when it's dull, right? And then the other thing is that you can use things like icebergs and catching the edge to potentially find a more advantageous spot that will make it a little bit easier for you to hold it. If I can catch the edge, and then, hey, it shouldn't tick against me, and if it looks like it's going to, I can just mark it out. It's really easy for me to get out. I'm not taking as much risk. Or at the very least, I'm kind of eliminating the downside that you get from, the adverse excursion versus using a market order, right? If I use a market order, then I'm paying up for it. If I use a limit order and I get filled, then there's a good chance I'm going to get adverse excursion. So if I can utilize an iceberg order or I can utilize catching the edge, then that can potentially be a better entry spot for you, right? But the kind of technical entry signal that you're talking about, I don't think it really exists in our time frame. Because you're talking about the time frame where there's literally the most noise, essentially. That would be another interesting way of putting it, is here's noise. Why did I stop using my pen? Hold on a second, I thought I heard something. I think we're okay. Noise. And, oh, we got Bowman speaking, by the way. Time frame. And it seems to me that there's lots of noise, a short time, and then there's tons and tons, and then it kind of flattens out. And you're trading in here, where there's the most amount of noise to deal with. Okay, so let me ask the question. Let's read this question. In regard to the cost basis indicator, when price gets into the area of those lines, can we make assumptions as to if the market makers are adding or subtracting to their book? You could guess, I suppose, but ultimately we'd have to come and look at it, right? So what are we seeing right now is that buyers are adding to the book right now. So I'm still kind of seeing some things that kind of make me think go long. Interesting that was kind of where they slowed down, was when they got to this line tends to be where the market makers start to be like pulling back on liquidity and the square root law starts to come in and take effect, right? So that's why that line is so useful. Typically you will see a bounce back to this line, right? So that might be the play right now if you're going to take the mean reversion as buy and take it off at 10.5. But this is really starting to look like it's just consolidating down here, and that, you know, that you're not going to get many more significant swings like that. Yeah, we're at some daily volatility extremes, so I wouldn't be surprised if bids were gobbling up whatever is thrown at them down there. Yeah. I think I wouldn't say that like them gobbling up bids is like explicitly a sign that it's going to come up, but it does mean you kind of got to be aware, because what's going to happen over here is that if market buys start hitting the offers here, there's not going to be as many offers. The market makers aren't going to hold as many offers there as normal, because they have all of these bids. They're going to pull these because they kind of want the market to move up. So it will probably be easier for buyers to push higher than it will be for sellers to push lower. And you can kind of see that in the behavior that the market makers are doing. Did that answer the question? Where did it go? Slim, did that answer your question, Slim? Well, it was one tilt. The way that he asked the question was, when price gets into the area of those lines, can we make assumptions as to if the market makers are adding or subtracting to the book, right? So coming back to here, I think what he's asking is, okay, if we're below here or we're in here, can I make assumptions about what the market maker is doing? And I think that like a more direct answer to that is no. I can see what they're doing after the fact, and you might be able to surmise it sometimes, like based on the situation and everything that you know, I seem to be able to kind of guess that that's going to happen. But like, is there some sort of rule that when it's in here, they're actually doing this or doing that? No, I haven't seen that. That's why I said you can guess, because I kind of guessed that market makers were probably adding inventory in here. And they are. So we got more stuff today, right? We've got University of Michigan wholesale sales. Did we already get the comments from Bowman? I think we did. Can you use the Kyle model to explain who will win? Is the Super Bowl this weekend? I haven't been following that stuff. Sunday, February 9th, between the Kansas City Chiefs again at the Philadelphia Eagles. Wait, wasn't that last year's? Who was it last year? It's going to fade 16 ticks. Do you think that it's going to come back up 15.6? Well, you can kind of see this thing that I was talking about where it's like all of a sudden it seems like it's easier for them to move up a little bit. That would be really funny if they get to 10, because that was probably a setup that I probably should have taken, right? I think I've already embarrassed myself enough with trying to trade non-farms though today. Oh, non-farms are hard to trade, guys. So the issue is that the main thing that we got is, oh, here's what the flows should be like based on the news itself. But then there's also like the end of week flows and existing position and who knows what. I just find that my ability to predict flows is much more limited on non-farm payroll days for some reason. Some of my best trades have been on non-farm payroll days. But, you know, some of my biggest losses too. And I don't know if it's actually worth it for me to trade them or not. Something's going on in the JPY. Oh, no, that's really weird. How come my JPY is not updating? That's fun. Interesting that I only just now noticed that too. Let me try reloading all the tick data on that and seeing if that fixes it. It's the same thing with my dollar. Oh, I see what's going on here. It's like sometimes NinjaTrader just gets this weird issue where it's like it'll just crash on one of these data series, and then every chart that is using that data series doesn't update correctly. That non-farms payroll isn't a good data trade. I think that you have to be super selective about it. And I don't necessarily see anything about today's non-farm payroll that would make it a particularly good non-farms payroll to trade, right? I think I was trading it because I had just gotten in the mode of like, let's do some stuff and have some fun, you know? Normally, I probably wouldn't take a position off of it. And I did say, you know, at the beginning, oh, we'll keep it on the experimental. We'll do, you know, all these things. Still, I took a position. I thought that it was going too low, and that was dead wrong. So... But going back to what we were talking about earlier, for it to like spike that high on the initial release and then ultimately be a sell is a little unusual. It's not like earth-shattering or anything, but it's a little unusual. Okay, now that I can see that, now I'm actually even more bewildered. Okay, so the Japanese yen is strengthening, even though the treasuries got sold pretty hard. And not any change in the spreads either. Very interesting. Gold's looking good. Well, with the way that the different assets are moving and everything, I'm still getting this kind of like the trade war inflation fears trade vibes, you know? Could it really be a case of like, oh, okay, we had the news and they don't really actually think that it's that big of a deal, and so now they're reverting to their larger plays, their more larger macro plays? Okay, well, so going back to the inventory cost basis, remember it's a moving target, right? I mean, this changes each bar, but my recommendation is to take profits one tick before it. That means that if I was long, I would be looking to take it off at 10. Because there's a slight chance. I'd say normally you will get filled at 10.5, but then and 11, but then once beyond 11, like your chances of getting filled decrease substantially. So the safest bet is just one tick below it. Especially if it's like we're still in a clear sell. But I don't know. We're kind of getting some, you know, like what's with that right there? Maybe we are getting a counterflow now. Is it lining up with the VWAP? Okay. That probably... I wonder if when they're like really close to each other and everything, if that makes it matter more. I was thinking about this because of a strategy that somebody else sent me that I was kind of like, oh, okay, well, that's pretty simple. I don't think that that's necessarily going to work, but I've never tried that specific combination of things. And part of it was like, okay, what if I have two lines that aren't really very correlated, but now all of a sudden they're really close to each other? I think that you're full of shit, Tilt, to be frank with you. I've seen more traders get wiped out using the dollar index as a correlation for the asset they are trading. I don't think that you've ever seen anybody do that because 99% of retail traders don't have access to it. The only people that really have access to it are us because of the synthetic dollar index. Why did he even bring that up? I wasn't saying anything about the dollar. Oh, yeah, I guess you can watch it on TradingView. Well, so if you're going to do DX, though, that's 10 minutes delayed. If you watch DX on TradingView, it's 10 minutes delayed. Yeah, nobody pays for the insane ice fee. When it's 16 ticks, what, from the low? So you're saying that it's going to go all the way back to 109.20? Oh, no, not 109.20. That would be 32 ticks. It'll be, the low was 0408. So we'll go to 12. Well, 109.12 I can see because of the volume profile and everything. Although, how long ago was that? Probably doesn't matter anymore. Probably doesn't matter anymore. But that doesn't mean that it's like not likely to get to 12. It just means that like that, you know, saying, oh, here's the edge of the volume profile, so it should go to there is not probably really relevant. We're getting some buying here, so with the buying that we're having, you know, if that kept up, we could go all the way back up to the highs for that matter. So 12 is not unreasonable. I guess what I'm saying, AJ, is that if it gets there to 12, I'm not necessarily impressed because that would be pretty within the range of standard probabilities right now. Now the ticker on, if you just go to DX, there's DX futures. Yeah, I don't think that there's an index that gives you live data on TradingView though. If you have the paid version of TradingView, then I think that you would get live dollar index data. Live stream is going to be delayed by the nature. Well, you know, only like 5 seconds. I think I see what's going on here, though. Are you? Okay. So Uzi, you tell me what do you think Tilt's deal here is? What do you think? You tell me. I have an idea of what I think his deal is. You tell me what you think his deal is, and we'll see if we're on the same page here. Okay. In the meantime, let's talk about how would you use the dollar index. Well, so I have found that the currencies in general and the dollar in particular are really, really, really random. Like they really are just like, oh man, trying to predict like what the next candle is gonna do is just absolutely. Yeah. So I don't know what you're asking me. Okay. So why do you think that Tilt behaves the way that he does when he's talking to us? Is the question. Anyways, you know, when I look at the treasuries, treasuries are kind of interesting because like they just love to trend, right? And it's like, yeah, you can see the trend. This is going to go. There's not like a lot of surprises. It's kind of like there's a point at where I kind of have a pretty good idea, like it's going to do something. I don't know if it's going to go up or down, but I kind of know that that's a decision point, right? Whereas in the dollar index, man, that thing could just do anything, anytime, for any reason, right? But it does have trends. And generally speaking, what I see is, if the dollar is moving one way and my instrument is moving the other way, oh, okay. So maybe the reason that my instrument is moving isn't because people are buying or selling and trying to make a call in the treasury itself. For instance, we're moving back up in the treasuries right now, right? Oh, we're back to 07.5. I guess that's still kind of like a mild pullback. But we are seeing cumulative delta rise in the 10-year, right? Seeing cumulative delta in the 10-year rise. So I might have a theory that the market is freaking out over the prices paid and all of that, and they're actually going to look at all of the numbers and say, oh, actually, this is just because of the California wildfires, and it doesn't matter. So maybe we should go back to where we were before the number started, for instance. Maybe that's my theory. Okay, that sounds like a reasonable theory. I kind of think that we already have some information that kind of cancels that one out, but let's just run with it for now. Okay, is the buying that we're seeing because of that theory, right? But then I come over here and I say, oh, well, sorry, wrong page. And I come over here and I see, oh, well, but the dollar index was moving down that whole time. So basically, the dollar index reversed. It boosted the treasuries. That kind of makes me go, okay, maybe I have to discount the order flow that I'm seeing in the 10-year treasury a little bit. It doesn't necessarily mean that people are taking a big bet in the treasury. They're probably just trading the correlations on it, right? So unless I have some theory about what I think the dollar index is going to do next, which I usually don't, because like I said, I can't predict it. I think that if I was going to trade the dollar index, I would find that super, super hard, right? But it does kind of allow me to go through and say, like, here are all my different theories about why it's moving right now. I can look at the correlations and everything and can say, well, this one doesn't make sense. This one doesn't make sense. That actually kind of boosts this one. Right? So that's how you use those sorts of things. Okay. Uzi says, combination of things. I mean, I've come at you before over feeling like you're condescending. Yeah, that's total. I totally am condescending. Right? Because like most people are like, okay, this guy said this thing that I disagree with, but I'm going to put myself in their mind and try to understand why they might think that. And I'm also going to put myself in their mind and think, how are they going to react to the thing that I'm going to say, whatever the deal. And so you might have this thought that, well, that's like really dumb, but you don't say that because you're a normal person. Then you know how dumb that is, right? But Seth, he just says what he's thinking at the moment. Especially when it's one of these things where it's like I've already said it, or like I already feel like I'm kind of like really handing it, and they say things that I would think are like really, really dense. You know what I mean? But I don't think that explains it, right? The flexing part is part of a normal retail trader behavior online. Maybe. But like, here's the thing. You go into a stream and you say something multiple times. Because listen, I don't treat everybody like that, right? It is based on what he's saying to me, right? I knocked him all week. He keeps coming back. Why would who would do that? Who would do that? If I had $1 for every quote-unquote successful retail trader I've seen in the last 15 years, I'd never have to fund my own accounts. Well, so I have this theory. I have this larger theory. I have a theory that retail day trading has a tendency to attract more narcissists and psychopaths and people of that nature than other hobbies do. I don't think that that's like a crazy groundbreaking theory, but I guess part 2 of the theory is that explains a lot of the weird dynamics that you get in the day trading space. Oh, by the way, they turned around. Did they get to... I said 10, right? I said put your profits at 10 because the chances of 10.5 are significantly less. Can you get a better example than that? Come on. I don't want to be like, obviously there's like selection bias and that sort of a thing, but I'm just telling, every time that there's a mean reversion trade, that's where they do, within one tick above or below it. That's where it stops. Almost every time. First time it bounces hard, it seems. And the process of a retail trader bragging about their success and then subsequently being asked to prove it is always the same. Yeah. No, you should be able to just put it in a PDF and send it to us. Yeah, you're bragging if it's true. Yeah. So see what happens is society holds the market in a certain esteem. Like, especially since the 80s, we've been told the smartest people, they're the ones that are able to master the market. Like Jim Simons, for instance, right? And so everybody goes, "Oh, I'm super smart." Yes, everybody tells me that I probably shouldn't do it, that I'm not going to have success. But see, I'm going to prove to be the exception. I'm going to be I'm smarter and better than everybody else, and I'm going to be the one that's going to come in and do it and make money with it. I mean, come on. You're not going to do it unless you believe that about yourself to some degree, right? You have to have that kind of confidence in yourself. That or you're kind of like me and you love it so much that you don't care if you're good at it or not. Although I think that I've gotten really good at it. So if you're this person that's a narcissist, what's a narcissist? A narcissist is a person that is overly obsessed with how they are viewed, right? If you're a narcissist and you're looking to elevate yourself as much as possible, what better way to do it than mastering the markets, right? So narcissists are attracted to day trading. And then that is why you get all of the strange interactions that we always deal with, that we're kind of like, what the heck is with that, right? Narcissist has to believe that they're the best day trader ever. And they're going to be kind of reluctant to put their entire trading history out there for it to be dissected. And if they're not doing well, and they're telling everybody that they were, then they basically have no choice but to lie about it. Take a screen clip? But you have to do it. You have like 5 seconds to do it, right? Don't give him enough time to go and edit it. That's, I think, what he's saying, right? Yeah, it should take you less than 60 seconds, and if it takes you 20 minutes, then I know you're bullshit. Yeah. So my theory. So here's another interesting thing about narcissists, is that narcissists just can't stand people like me. Because you get two things. One thing is that when you're in the actual conversation, they find it difficult to read, right? Like, are they actually getting under my skin? Do I really actually enjoy this? Am I laughing about it? Am I screaming inside? They can't tell, because my reactions to things are just too random and nonsensical, right? And then the narcissist really cares about what other people think about them, and I don't care about, this whole thing. I don't sit here and think like, where do I think that this person ranks in the overall society, yada 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 yada, right? I don't care. I don't think about that stuff. I understand it. I know when it needs to be applied, and I know how to use it successfully, just like normal people do. I just don't care about it in the way that other people do, right? Yeah. So you got triggered when... No, there was somebody else that I was getting really upset about, but this is a thing. You think I'm triggered or not? I mean, how... Okay, maybe I'm triggered. How triggered am I? Can you tell? I don't know. The thing is that you will get these people in here. Oh, why would you come back, right? Why would you come back? But see, in this situation, if I call somebody out, if I'm kind of like, nah, I kind of think that you don't know what you're talking about. I kind of think that you're garbage. I kind of, because most people are afraid to do that, right? Most people are afraid to be like, well, maybe, maybe this person really is like a really successful trader, and at some point in the future, he's going to be super, super famous, and I really don't want to piss him off. I don't give a shit. I don't think about those sorts of things. No, all I think is I'm sharing empirical information, and then he says things that contradicts that. He must not really know what he's doing. And or he'll say things that I know are kind of like, just like straight up like, okay. You know why I follow the dollar index? Because when I was at the bank, that was the one thing they had on their screens. Like, they didn't have a whole lot of charts, but they had a chart of the dollar. Okay, so what happens is you're a narcissist. You come into a community. You want to elevate yourself, so you start saying stuff, and then the creator of that community doesn't give you the just due that you think that you deserve, and actually kind of like trashes you. That narcissist super hates that, right? Then they're gonna stick around, and they're really gonna try and prove it, right? So that's what I think. I think he might be a narcissist. Because you notice that when I start really start like explicitly insulting him, I guess you could say, is when he really like starts to react. Yeah. I mean, I guess most people would react, but it's kind of like, man, if I was making, my whole living off of trading, like if I was making 6 figures a year off of trading, like why would I go and argue with somebody in a, you know what I mean? Like, doesn't. In all honesty, yesterday, here's what will happen. Because I have a really strange relationship with emotions, right? Like, my emotions can be so much stronger than other people's. Really, seriously. If I really, like, work it up, and I can, like, explicitly work it up, Like, there are things that it's just like, I know this gives you dopamine. Like, sitting there and pining for something, this gives you dopamine. So I will literally, like, put myself in a position, it's like, let's pine over the wife for a little bit, and that'll give me the dopamine, and then, like, I go off and I do something else, right? And that actually works pretty well, as long as it's not, like, sometimes with her health and everything, there's, I tell you what, both of us, we've got our health problems, right? It's been pretty good lately. I'm sufficiently hugged as of late. And so then that works really well. And I can, it gives me the dopamine to, like, go off and do other things and be productive and things like that, right? Watch your screens. I probably should be watching my screens. I don't know. It's in a hole right now, though, so not too interested. Okay. But anyways, but it's very difficult for me to sustain those emotions. So I can have really strong emotions, but the medication that I'm on kind of means that if I don't actively keep it, okay. Oh, I forgot about the news. That's what you were trying to tell me. Man, the S&P 500 really reacts strongly to that. What's with that? Okay, so Michigan's sentiment was 67 spot 8 versus 71 spot 8. 5-year inflation slightly higher than expected. Oh, whoa. Wait, what? University of Michigan 1-year inflation preliminary 4.3% versus an expected 3.3%. And I mean, I guess the treasuries are selling off of it, but not really. Maybe because they just already ran it or something. That is really wild that you would get a huge move in the S&P 500 off of that and not a really very big move in the treasuries. Well, that is very curious. But those inflation expectations. Okay. Well, so clearly what's happening here is that Democrats now all think that inflation is going to happen, right? I mean that's almost certainly why. Now, we have found that inflation expectations tends to follow through into realized inflation, with the theory being that, like, it's kind of our expectations of inflation that kind of cause inflation to happen. But that's a theory. So this is kind of an interesting situation that allows us to almost perfectly test that theory, assuming that you don't actually get, like, a real trade war that really does just make the price of almost everything go up. What I think we should see is a limited trade war on certain goods, and the cost of those certain goods will go up, and at the cost of demand in other goods. So I wouldn't necessarily expect to see overall CP or like core PCE inflation to rise significantly. So if we did have that situation and inflation still went up to 4.3%, then that would kind of be more to me like maybe it was expectations. But is this a situation where we can kind of discount the expectations? That's kind of interesting. Now, I'm not saying all that because I think that's relevant to the trade at this very moment, but it will be relevant at some point. And in this moment, though, what matters is that the S&P 500 reacted so strongly to that report, and the treasuries did not. The clear play in the treasury would be sell. So I think that I can probably sell it here, and I would maybe get a little bit lower. I don't know if I like the price necessarily, the place. But I also don't think that there's that much reward in it. Oh, this is very interesting. Well, let's just keep this. Let's just keep that in our mind. What was I saying? I was talking about emotions. I feel that I can have stronger emotions than other people, but it's very difficult for me to persist them. Like the medication that I'm on just kind of gives me the tendency to go back to even kill very, very quickly, right? So I will like very much try to play it up. I kind of think that it's funny. Do you guys not think that it's funny? I kind of think that when you get really, really overly excited about something, that it's kind of funny. But it did not hit the 16 yet. Honestly, AG, after that news, I'm not so sure it's going to happen now. So the S&P 500 really reacted negatively to that. And I don't think I've ever seen a situation where the inflation expectations was a whole % off from the market expectation. I'm really surprised that the treasuries didn't like spike and move to a new low off of that. That seems significant to me. Volatility extremes. Yeah, you might be right. Like it might be that like we just already sold it too much today in the treasury. Because the SPOOs were up. Man, this is a big move, man. 5,000 net contracts in the S&P. Well, okay, so you know what? Another thing that I should note is that there was a decent amount of selling on it. There was like 10K net selling. It didn't break for whatever reason. I can kind of see it lining up. So, like 06.5 to be the price from the news, that'd be amazing, but it's not going to give me that. Ooh, look at that. Okay. Maybe? I'm surprised on that second click that I'm 600 in line. Oh, well. So you gotta be careful because this is kind of like a spot where like, well, I'm kind of wondering if the market's going to become unhinged. But this is also one of the places where you might start to see the square root law coming into play. Not seeing it yet, but it's kind of a spot to watch. Actually, we should look at our cost basis. Oh, well, it's way down there. Oh, 1/2. Oh, 1/2. Did it fill it? Okay. Yeah, it is a little stuck there. That uptick at 04 was a little suspicious. Did you see that? It upticked. It almost immediately stacked to 4,000 and then immediately pulled. Well, okay, so there it did it again and they ticked up. I puked that again. Oops. Wrong. Oh, just click flat. I misclicked there on the exit. But. You were talking about the ES? Oh, really? Oh, I don't know when you said it on the ES. Like to be honest with you guys, let me tell you something. If you're new to the stream, by the way, good morning, Gus. Unless you can prove something to me empirically, I don't care. Like, unless it's something that you can prove to me empirically, there's not really much point in saying it to me. I'm just gonna make fun of you. And like, the more that you push it, the more that I'm gonna start to start jabbing you. A little disappointed in that one because I was only trying to get the one tick, but it just didn't work. It does kind of look like well, let's try this, okay? Because it does look like I should be able to get fills in this area. Because just 0.4 was probably a little bit too aggressive. Yeah. Interesting. Oh. Now I have to FOMO in. I genuinely do feel like FOMOing in there, to be honest with you. Okay. Watch this. I'm going to try and put orders on it as it goes down, and we'll see if any of them fill. And it's kind of starting to give me this vibe that, like, we're not going to fill anything now. Yeah. You should be looking to short all day. Yeah, at this point, I kind of think that you don't want to be looking for longs, yeah. That one, if I had been a little quicker on the draw, it might have filled me. I get that every order is a market order from the one sides. Do you have a suggestion for how to know which side is being the most aggressive liquidity takers versus I mean, I think I know what you're asking, but like within the terms that you're using, it kind of, you know, like let's not use the word aggressive, right? Because to me, the use of a market order is inherently more aggressive, you know? What I would say is more like, is there a way to tell who is being more influential in the market, you know? Because you will get these places where it seems like that the market orders dominate, and then you'll get these places where it seems like that the limit orders dominate, right? And like for starters, I'm not sure I could say that there's a place where you can explicitly predict it per se. But I think I kind of understand the conundrum that you're getting at, and here's how I have solved it, right? Okay. I really only care when it's the market makers that are dominating, is really what it comes down to. I think I said that wrong. Let me start over. I really only care when it's the market orders that are dominating. So if the market orders, if I don't expect the market orders to dominate, if I don't expect a huge flood of market orders to come in the near future, then I'm significantly less interested in it, right? Because essentially, if somebody really needs to trade something, they're going to buy a lot of something, or they're panicked, or whatever the deal is, a large player, they basically have to use market orders to do it. They just can't buy enough of it using limit orders. They just can't. So I'm much more interested when I'm seeing that imbalance in the market orders, right? Now, there are some situations where you see a lot of market orders coming in and it hits into the wall and it's just not able to get through. But those are pretty rare. Those are pretty rare. And I really only see those happen on situations where I'm really not entirely sure why the market orders are coming anyways, you know? So that's, you know, I used to have this whole thing that was like, okay, I'm watching the order flow, but do I expect the market orders to win or the limit orders to win? And I always go back and forth like, okay, there was a huge iceberg there. How am I supposed to interpret that? Yeah, that was an iceberg, but there was also that many people willing to buy there at that location. So what should that tell us, right? And when I shifted my perspective to market orders are what matters. Market orders are what matters. Market orders are the indication that somebody's coming in and doing something, you know, and started ignoring that other kind of perspective of it. It made things a lot more clear because that is, you know, it is a heuristic, right? It is like a way oversimplified view of the market, but it's one that really simplifies things and makes execution easier. It really does. Most of the time, you know, if the limit orders are what's dominating, it's something weird going on that you really don't have much of an edge on. And kind of the thing that kind of got me to taking that perspective was when I read the Kyle model. Because that moved me into, okay, actually what I should look at it as is there's the market maker, there's the informed trader, and there's noise. And I can't compete with the market maker because I can't get at the front of the queue. So I have to be competing with trying to beat the informed trader, to be more informed than the informed trader. And the informed trader, they're going to be using market orders. So once I said the informed traders are the ones that are using the market orders, and the market makers are the ones that are using limit orders, and I'm overly broad about that distinction, it makes it much easier to read the order flow. Even though the reality is that a large meta order is at most 50% limit orders. Hold on a second. I'm going to go check on the kits. Might need to just go here in a bit. I went up there and checked on him, and one of them had really, really smelly diapers. So I changed the diaper, and he had an absolute fit about me changing it. And so then I'm like, okay, no, now you can go back to sleep. And then he threw a big fit about me putting the blanket back on him. So this is just like, doesn't matter what you do. He's just pissed off. And so now he's up and walking around. What has been pushing it was the University of Michigan sentiment. So University of Michigan sentiment preliminary headline number 67.8 versus an expected 71.8. 1 year inflation expectations 4.3% versus an expected 3.3%. So that report really killed the S&P 500. So we've been trying to sort out. I find it a little bit weird that the S&P 500 reacted so negatively to that, and the treasuries didn't really move that much on that report. But that is why I did start get market making short. I tried taking one and it didn't. I could try changing. I tell you what, the results today have been just absolutely dismal. Yeah. I took one. When was that one though? Right here. Both of them. I took two. Since that, at 04 and 05, we're now well below that, right? So these ones were me trying to get myself a position and just like not being able to do it very effectively, right? So yeah, but I'm not. I guess I'm not taking today. You know, they're all in the experimental account. I have an experimental account and a serious one, and these have all been in the experimental account. And the experimental account used to be like multiple contracts, and the serious ones were always all in, all out. But I'm going to change that. I'm going to give myself three contracts to start in ZN in the serious account, and the experiment can kind of be more like these where like in this one I've been market making and picking up 5 contracts at every spot. I only want it to be like a net 10 if it goes further, so I can do that. There we go. I could take the other one off too, frankly, but I guess if we want to wipe out that loss right there, we'd want to keep this on. I don't think it's going to go that far though, unfortunately. Do you know if they have an API or live streaming of anything Trump says? No, but I mean, like, News Squawks catches it fairly quickly. It's not as good as it was on the Twitter days. Although I'm sure there's a Twitter account that retweets whatever's happening. Well, even if I need to go and take care of the boys here a little bit, we should keep it running until the top of the hour and see how much further they get, because we're below this pivot spot here in the treasuries. Like, there's not really much of a cap on how much further this could go, to be honest. The way that it played out though is incredibly I don't know, like, I do think that that really high inflation expectations number might be something that we have to be cautious with, right? Like, yeah, there is a theory that inflation expectations follow through into real inflation, but there's clearly like a partisan bias in this here right now, right? So hold on a second. I'll check on him again, and then maybe I'll read some articles here for us. All right. Still at the same place that we were. ZN cumulative delta is only 18.7k. I don't know when you have it reset, but Goolsby speaking at the moment. I do kind of wonder how much the Fed speaker has been playing into the way that it's moving as well. I am a little bit like miffed because I would like to see interest rates lower. And I thought that the non-farms payroll would be a data point that could really start getting things going in the right direction. And the report came in kind of what I was going to like what I was expecting, and rates are higher. Not like huge. We're not above 4.5 yet. Okay, Goolsby's being dovish out there, so let's read. Do they have? Yeah, here we go. With Democrats driving inflation expectations dramatically higher in January, all eyes will be on this morning's University of Michigan preliminary data for February. And right they were, as one-year inflation expectations ramped up to 4.3%. Additionally, the medium-term inflation expectation jumped up to 3.3%, the highest it's been since June of 2008. Most notably, the surge in inflation expectations was due entirely to Democrats. We guess they've been reading Politico's tax tariff fear-mongering too much? Overall, sentiment slumped in February from 71.1 to 67.8, greatly disappointing the expectation of a rise to 71.8 with both current conditions and expectations sliding. Finally, the slump in broad sentiment seems driven by partisan politics. Of course, with Democrats now at their least confident since August of 2020. What? Here is the chart. And you got Republicans and Democrats and independents with independents looking like they're doing okay, but Democrats being super. I mean, if your economic expectations are lower than your expectations immediately after COVID, there's something wrong there. That's bonkers. All 5 index components deteriorated this month, led by a 12% slide in buying conditions for durables, in part, according to survey director Joanne Su, due to a perception that it may be too late to avoid the negative impact of tariff policy. Expectations for personal finances sank about 6% last month, again seen across all political affiliations, reaching its lowest value since October 2023. Many consumers appear worried that high inflation will return within the next year. Perhaps some Democrats should read what Goldman Sachs said on the matter of, quote, full tariffs. Goldman's rule of thumb is that every 1% increase in the effective tariff rate raises core PCE level by spot 1%. The bank now estimates the tariff will provide a 1-year boost to year-on-year core PCI inflation of spot 5% versus spot 3% previously, leaving it at 2.6% in December. Interviews for this release concluded on February 4th, so before Mexico and Canada had folded and Trump delayed tariffs. That's a good point, too. Well, let's take one off there. Is politics even significant for the stock market? It absolutely is. So elections, markets move very significantly on elections. Markets move very significantly on developments for legislation and or executive orders that will affect markets. You really, I think that if you're going to trade and you hate politics, then trading is probably not for you. You should be following the political world, and it's really hard because you kind of have to have this ability to disconnect how you might feel politically from what you think is going to happen in the economy. You can see here in this particular instance, most people can't. Democrats are more bearish on the economy than they were at the depths of the COVID crisis. That's just absolutely silly. Have to be unemotional. Well, there you go. Now let's read the January the unemployment numbers. There were strong convictions ahead of today's jobs report, perhaps because everyone by now knows the numbers are all bogus and made up on the spot, and perhaps this time it was a good thing because while on the one hand the payrolls print came in weaker than expected, driven by a sharp drop in private payrolls, the unemployment rate actually dropped below estimates, painting yet another mixed picture of what to expect. Here's what the BLS reported in Trump's first official jobs report since he returned to the White House. Total payrolls printed at 143K, down sharply from an upwardly revised 307K and missing estimates of 175. Looking further back, the change in total non-farm payroll employment for November was revised up by 49,000, from up 212 to up 261. And when adding the 51K revision to December employment in November and December is combined 100K higher than previously reported. Oh, okay, I missed that. And while the sequential change in the establishment survey was notable, what was far more notable was the household survey, where we saw massive population-related revisions, which pushed the civilian labor force higher by 2.2 million to 170 million. Well, the number of employed workers also increased by over 2.2 million. As a result, the household survey has finally caught up to the establishment survey. Oh, whoa, that's huge. Because we're all saying, oh, the establishment survey must be wrong and it's going to come back down eventually. Now they've caught up by population revisions. That's a big deal. I'm a little bit skeptical about it, but at the same time, that might possibly explain why we saw them sell. Although I'm not quite sure I understand why it was so dramatic, you know? Can you trade with trading bots range on it? Yeah. Well, what I've been doing here, you can definitely do that with bots. I think I'm just going to take the other 5 off just because, I'm not going to be around here forever. I really want to play with this more, but I'm kind of embarrassed with the way that it went today. Like, I'm okay with having played this and having lost on it and everything, but and I'm okay with sizing up and like trading multiple, as much as 20 contracts in this situation, but not right after the release, so I got to change that in the future. Or maybe I just need to get serious again and only trade 3. Have you been trading with swap? No, I don't trade swaps. Okay, since the number of unemployed people actually declined, while the number of employed workers rose by 2.2 million, the unemployment rate declined from 4% to 4.1%. According to the BLS, the unemployment rates for adult men and adult women and teenagers, whites, blacks, Hispanics, all showed little or no change in January, although, as can be seen on the chart above, white employment is dropping notably while black unemployment rate is rising. despite the drop in the unemployment rate, the participation rate actually rose modestly. Some qualitative details. And this is the part where I usually just gloss through it because like there's too many numbers and reading them to you wouldn't necessarily all make sense. While some had worried that the recent California fires could impact today's survey, the BLS denied that with the following comment. Wildfires in Southern California began in early January and continued through the reference periods for both the household and establishment surveys. Severe winter weather occurred in much of the country during January reference periods for both surveys. These events had no discernible effect on national payroll employment hours and earnings from the establishment survey, nor on the national unemployment rate from the household survey response rates for the two surveys. Curious. Goolsby still speaking. I don't know. You know what's really it is now that we got the number up at the top, right? It's kind of like, well, I guess it doesn't matter if I show a really huge negative number. That was probably attract people too, right? Could the bottom have been reached? Well, they're definitely finding it difficult to push it here. You know, I was not necessarily expecting to get filled at 0.5, but I was kind of like, why not? There we go. So 60,000 federal employees have accepted buyout offer. That's, I think, a problem for the jobs market. But like, I guess that they probably don't have to go and get a job right away, but oh, I would I have gotten filled at 0.5, huh? It did clear it. Would it not be funny if Trump crashed the economy? I don't know. I don't think it would be funny. Would kind of depend on how it ended up, right? Because if tariffs cause a recession, then that would just kind of be what everybody expects and wouldn't be really very interesting to me. You say we're going to evens? Okay, so let me show you on the cost basis. Something kind of interesting happened here. Well, so for starters, this bounce was super good. Should we have gone short then? Hell, I guess if you knew what the news was going to be, because I mean that's actually a really big move. Like if we cancel that, that's actually a pretty good move. Wow. Man. But the thing that I find curious is that I'm not really seeing net buying from here. So that must mean that what's happening is people are just adding more offers on top of it, and the bids are pulling out of the way. So the cost basis for these have actually kind of gone up. Now it's late enough. I don't think I would expect them to revert back up there. It actually kind of suggests that if there is some sort of imbalance, like market makers kind of caught a little bit, that that's going to be these shorts to cover, I guess. Come back. The spoos. Okay, well, that cost basis short in S&P 500 is acting kind of as resistance right now. There hasn't been that much selling since that initial thing, though. I don't know. I feel that, of course, markets are not informationally efficient, but was the move that we saw today like overreaction, underreaction, etc., and I do feel that like the degree to which it moved is probably overreaction. I don't think that what we got in the employment report is going to be as useful in determining where rates go as like the PMIs that we just got, right? Because a lot of the things that they're reacting to have to do with revisions and all that stuff. So, I don't know what that means for next week, though. We do have like CPI and stuff next week, right? Next week, core CPI is on Wednesday. PPI is on Thursday. Retail sales is on Friday. But I guess the thing is that while I see this weakness, kind of hints of this weakness there, particularly in the job openings, for those few people that are unemployed, it's really hell. And almost everything else, the numbers don't really, they might be weaker than we would like, but they're not anything like we're going into contraction or anything. Like the economy looks overall pretty good. If the tariff thing all works out, especially with Canada and Mexico. I mean, I feel like the tariffs with Canada and Mexico would be really, really damaging. But, if nothing significant happens there, then we still kind of have this economy that just seems too strong. And I do feel that we need lower interest rates. And I'm just kind of, and I do feel that like the stock market is just really, really high. Let's not say overvalued, because the valuation doesn't necessarily matter. But I just kind of still have this fear that like things could shift very, very quickly, but we're not seeing any signs of it. I mean, that's the thing that's kind of crazy about it, is that clearly the lots of Democrats, they definitely feel that there's like some economic turmoil in our future, but it's not showing that today. Well, it'll be difficult to sort out, but I need to think about some other things. I'm a little frustrated because I feel like that people don't want good content. If I make a good content on YouTube, people just whine. I don't get it. What do I need to do? I got a bunch of things in process still, and I'm gonna keep to those things, and I guess that's just what I do. But I kind of makes me feel like that I need to make some changes. I don't know where to do it, and I definitely feel like I need to make some changes with what I'm doing here live on stream. I mean, I haven't been taking very many trades lately. I did a bunch of stuff today that I probably shouldn't have. So, like, does that help? Does that hurt? I don't know. Probably doesn't matter, right? What's the overall number of views today? It's actually lower than normal. Whoa, 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 whoa. Okay, so we're hearing news from Congress that okay, let me read the exact. Trump told Republican lawmakers he plans to issue reciprocal tariffs as early as Friday. That would be today. That would be today. Okay. So the S&P 500 is selling off significantly more off of that. And strangely enough, the treasuries are buying on that news, even though shouldn't that mean more inflation? That doesn't make much sense, but they must be trading the straight correlation. The way that the treasuries are moving off of this is like particularly irrational in my opinion. If I had been like if I had been somebody that was like short from the beginning of this, like I had read those non-farm numbers and I immediately said, oh man, this is bad for rates. I'm going to sell rates today, right? Okay. And then I'd been short and then I just had that thing move against me. I would be thinking add to it. Because if this is just a flight to safety trade, then the treasuries are just moving the wrong way because of hedging and not really based on like where the Federal Reserve is going to set interest rates. So that is just incredibly fascinating. But because I'm not sure I believe like the larger thing that like that inflation is a really big problem right now and all of this stuff, I'm kind of like discounting all of that stuff. I don't know if it really makes me want to do anything here. Man. That was a really crazy move in the S&P 500, though. So three S tier moves in evening. I don't think I've ever seen that. Have we ever seen that? That is bonkers. Now, another thought I have is Donald Trump certainly must have told them that yesterday or the day before. Like, there has got to be people in the, like, informed traders in the market knowing that that headline was going to hit. But, you know, with all the other news, it's too difficult to try and disentangle the flows and sort out. What do you think ES will do? I think it will probably continue to sell. Well, so probably the worst of it is over. And you're probably going to see a little bit of mean reversion recovery through the rest of the session. It wouldn't surprise me to see like a really strong rally going into the close, for instance. But we're probably going to have a down day. And I guess we see what those retaliatory tariffs are. I don't think this is going to be a super big deal. So, like, what's going to happen is we're going to come in here on Monday, and I'm not sure we'll be thinking about any of those things. But they will have still had their impact, so we're just going to pick it up from there. But it does mean that, like, where we end up going through next week ends up being pretty key, I think. All right, well, I think it's time for me to get going. You can hear one of the boys unhappy again. So I will see you guys on Monday. We can talk about where we want to take things. In the meantime, stay excellent, team.